has oil, but Russia needs to buy things, and China has gold. So Russia will take gold. This is what's going on. Russia will take gold from another country for oil, because if it ever needs dollars again, which they just proved that they do from time to time, they just go to China and say, here's some gold, give us some dollars, give us some fiat. So it's become like the dollar becomes your emergency fund, and when you need it, right? And gold becomes your transactional medium. Anyway, I'm probably butchering that, but the bottom line is, in Zoltan's worst case scenario, gold doubles overnight because they start to price assets in gold, not in dollars. People are reacting to that. The thing that he describes above that, very loosely, because he's talking about a lot of things. I'm going to write about the whole report, but right now I'm running a piece on the gold section specifically. But what he talks about above that, which is a little bit convoluted for mere mortals like ourselves, is a lot more possible, and that is he's basically saying what Ghana did. Now, assuming that they actually are being honest about it, Ghana is saying, we're going to buy oil or fuel oil, right? Energy with gold. And the person this is what they're saying, they're representing this. The seller of the fuel oil to us says we don't have to convert the gold to dollars. They'll take it as gold. So what does that do? Well, that says two really important things. One is obvious, one is not so obvious. The obvious one, I think, for all of us is well, if they're not selling if they're not selling the gold to get first of all, on a micro thing, they're not losing money because they're not doing an unnecessary transaction. There's no friction. There's no intermediary. Okay, fine. That's simple, right? Well, assuming that the price is right, they're getting the actual price of spot gold. You free up the dollars on Ghana's balance sheet to not be used. You make their currency, the cedi or however it's called, less vulnerable to having to be sold to raise dollars to go buy those fuel oil. So now you can use it to buy color TVs, which we were talking about before, or Levi's jeans, right? Now, maybe you don't want a color TV, but the point is there's no pressure to carry as many dollars on your balance sheet. You've demoted the dollar as a reserve currency. That's the one that I think we all can wrap our heads around. It's like, wow, it's the barter concept, right? But it's not barter because barter says, I get fuel oil, they get gold, and they trade the gold for something else. Like that's bartering, like they convert, but it's not. See, the key to this is I think this is the speculative part. Ghana doesn't say that unless they've been given permission. You don't talk about that. You don't challenge the dollar passively or actively on a world stage. The number 2 African gold producer, I think. I don't care how big you are for gold. You don't do that unless you've got a contract signed, sealed, and delivered by someone who has told you, we will take the gold. So let's assume it's Russia. Could be anyone, but let's assume it's Russia. Russia says, okay, we'll take the gold. You don't have to use dollars. We want your gold. We can always get rid of our gold to China if we have to. But they're not going to get rid of the gold because, look, Ghana is saying, I'm selling oil for gold. I'm buying oil for gold. Russia, in this hypothetical, is saying, I'm not buying gold. I'm being paid in gold. And who will take gold on the other side? Russia needs to buy whatever China makes, sneakers, right? China makes sneakers, let's say, and everybody in Russia needs to get sneakers. China's going to get paid in gold for sneakers. That's not bartering. That's money. That's currency, right? So it could all be a hoax or a ruse. Russia's just going to basically use them as a scapegoat or a sacrificial lamb, and that may happen. But the sheer nerve to even say that itself makes you and me say, well, I need $5 more to sell my gold. And all of a sudden, gold becomes money. And that's extremely dangerous. It's extremely dangerous for the world. And, and it won't happen the way Zoltan is talking about, God forbid, for the world, not for my portfolio. But what he's saying is, it's an extension of what he said in February. And what he said in February, very simply, was we have a crisis. I think that we have a crisis of coming of commodities, a crisis of collateral, right? So the East makes oil, the East makes rubber from, and the West makes tires, right? And so we just take their rubber and we lever. We make $1 trillion in rubber and make $20 trillion in tires. So the inflation goes into the finished product. And we say, well, the rubber is really not that important. It's our technology and our entrepreneurship. And then it gets so bad that these third world countries that are being basically monetarily colonized say, you know what? We're not selling our rubber to you anymore. We're going to sell it to Russia. The supply chain, whole COVID thing that happened. And now it's like you have a shortage of collateral. So you can't do this $20 trillion in tire deals because you don't have the rubber coming in. Well, that's what happened with nickel, with lead, with steel. It's like your leverage, your financial leverage gets destroyed because the bottom of your pyramid, right? As you move further down the pyramid, the support, even though it's like a pyramid inverted in terms of size, it should be like this in terms of importance. It's the roots of a tree, The tire is the leaf and the flower. The rubber that makes the tire is the root. It's the raw material. It's the, not to sound like a hippie here, but it's real. And so this collateral shortage that Zoltan was warning about, it happened. Months later, boom, it happened. And now he's saying, well, there's a shortage of gold collateral. And if there's a shortage of gold collateral for the Western banks to cover their positions in terms of deliverable risk, well, then you've got a recipe for the same thing happening in gold and silver. By the way, silver will be, as you link, by the way, just as an aside, so I want to get this out there, as you tie gold to oil, you tie natural resource to resource. As you tie gold to oil, and you tie silver to gold. It's that simple. And now the lunatics over the years have been saying, well, what's the ratio of gold to silver in the ground? What is it, Chris?
About 9 or 10 to 1.
Yeah, 10 to 1, right? Exactly. And so we're like 70-1 is ridiculous. It should be 10 to 1. And I'd be like, and I'm a person who owns it. I was like, you guys are crazy. You guys are just nuts. Well, guess what? That's not nuts. If oil is worth 2 grams of gold, and those are not just the fact that silver goes up because it's 2 grams of gold because of inflation, it's because you reestablish the earth link. You reestablish the natural resource link, gold, oil, silver. And you're gonna get it closer to I don't wanna hype that, but if gold were remonetized tomorrow, the silver gold ratio would probably go to something like, under 30 to 1. Sure, it would.